welcome to State of the Market. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I am Mark Sebastian. I am your only option. Welcome to the State of the Market. Reminder, we're here every day at 10 a.m. hitting you with the best and most important stories, trade ideas that we see for that day, that week, and that month. Mondays are something special, though, because we also do our ticker highlight show. Each week, Andrew, myself, Leisha, and Hans run down our one to love and one to leave stocks that we share with you guys. And then we go behind the paywall into the Ticker Highlight Show Premium, and we pick one stock out of those list of 8 that we think is going to outperform either when we hate it, like it's going to drop a lot faster, or if we like it, we think it's going to pop. Last week's trade, BX, returned 50% overnight. So if you'd like to join us on the Ticker Highlight Show Premium, it is just a simple name your own price. So if you think having 4 trade ideas a month at a minimum, procured by myself, Andrew, Leisha, and Hans, that we open, manage, and close, start to finish every week. If that's worth $5 to you a month, you can pay $5. If it's worth $20, you can pay $20. If you want to pay $2,000, which I think it's worth, you can pay $2,000 a month, whatever your selection. So the way to join the Ticker Highlight Show Premium is simple and easy. Just click here and check it out, and then you can name your own price to join. It's as little as $1. The suggested price is a minimum of $5, or heck, you can pay 30, 40, 50, whatever your heart desires. So let's start with the names, and we'll start with me and my pick, and that is Intel. Intel Corporation. It's up another $4 today. This is a stock that is in full on breakout momentum mode. This appears to be on its way. I mean, it's already had a crazy run higher. And before you say, well, Mark, how long can these crazy runs last? Take a look at some of the price action of like on a 1-year chart of like Micron, and notably, and this is my one to leave, SanDisk. SanDisk is now over $1,000, and look at the run this thing has had. These things can go longer than you can imagine. They can be off kilter. You can say that's completely overvalued, and they will keep going. Just like stocks that are being dumped, you can say that's way too cheap, and they can keep dropping. So Intel, at this point, this is going to trade $100. Potentially this week, likely sometime between now and Memorial Day, it will be over there. We're going to be talking about Intel as a $500 billion company again, and new all-time highs. So I like Intel. I think Intel, a lot of the other chips, go through the chip names that have low price to earnings ratios, and you will find value. All right, take a look at Qualcomm. Qualcomm is exploding higher. We're going to talk about this in a second. Qualcomm is exploding higher. Fundamentally, price earnings ratio is about 30. You look at AMD at 133 and NVIDIA at 43, and you can see there's value there. Intel doesn't have a price earnings ratio because they still have net loss in the trailing 12 months from some write-offs. Now, I say that, and then I look at a name like SanDisk and I say, it's over $1,000. Couple of things are going to happen. I think that you're going to see in the next couple of weeks with SanDisk. They're going to announce a 10-for-1 stock split and or a potential stock offering to finance something new. My guess is the former. And then you'll see this run higher. And then once it splits, you will see the air completely come out of this one. But I think it's kind of gotten to the point of being completely overdone. So I think SanDisk is kind of, it's time to take a walk. Looking at Hans, and Hans is going live with a free class this week called the Great American Income Project. He and I are going to be working on that together. You are welcome to join he and I. It's at absolutely zero cost. Click the link there to drop in chat or call or shoot my email, my team an email, support@optionpit.com, and register yourself for free. So Hans loves Dell. It's had a really nice run. Earnings aren't till the end of the month. We've already seen it have a really nice run. One reason why I like Dell is that it's one of the winners out of what I perceive will be an eventual liquidation of Supermicro Computer. I'm not sure that's what he's fully looking at. On his hate is XLE. Hans is kind of done with the energy play. I don't hate energy. I think it's done going up, but I like it as a put play, personally. Leisha likes Boeing. And it makes sense. Post earnings, 3-day run. I'm interested to see what our pitchforks look like, but it does look like it's going up. I think the industrials are underpriced, and that is where there's value. So I don't hate it. What I do hate is Nike, and I'm sorry. They're gonna based on the 3-year performance of this company. Here's a prediction. Spinoff of Jordan Brands, eventual selling of Nike to Amazon or Walmart. And maybe somebody else. That's where I think this goes. Jordan Brands will be spun out, and Nike gets sold to somebody else. It'll be a weird day, but it happened to Reebok, it happened to Converse, and now it's going to happen to Nike. So yes, I'm with you, Alicia. I think Nike's going out of business long term. Jordan Brands is going to be its own kind of huge thing. They got better styles anyway. And let's close things out with Andrew, and he'll be joining me in a second. We got Fiserv. I'm guessing this is from Sybil. And Insulet on his one to hate is Insulet, PODD. This is not one I've heard of, but the chart looks terrible. And yeah. All right, so folks, for keeping notes, our lists of one we love. I love Intel. Hans loves Dell. Leisha loves Boeing. And Andrew likes Fiserv. I hate SanDisk, SNDK. Hans hates the XLE. Leisha, Nike, and KE. And Andrew, Insulet Corp, ticker symbol PODD. And those are 4 to love and 4 to hate. If you'd like to see which one of those we end up trading, you can click the link to join Ticker Highlight Show Premium. Join for, it's $5 or whatever you feel like you want to pay. All right. Now let's hit some of these headlines, because there are some headlines. We're down $5. The Nasdaq's down a little more, flat in the Dow, and we got a lot of news this week. The first is we've got Wednesday is kind of the day. It's going to be the everything day. We have the last Fed meeting with Powell as chair, or perceived last Fed meeting with Powell as chair. We have just a swath of earnings hitting us on Wednesday and following up on Thursday. 40% of the market cap this week, and over half of that on Wednesday, with the four giants, Amazon, Google, Microsoft, and Meta, being Wednesday after the close. And you still have, like, what's going on with Iran and oil kind of being the lone, like, womp womp in the room. And that is, that's the week that we've got. Just earnings and the Fed. Let's talk about this a little bit more. Let's bring in our own director of education and head of option trading. He is Andrew Giovinazzi. Good morning, Andrew. Hope you had a great weekend.
I did. Still cold. But yeah. But I was an outdoor weekend. It was sunny, it was nice. Moved a lot of wood, stuff like that.
Yeah.
Some cutting stuff down, and a lot of just moving stuff around.
More fun than moving stuff.
I had to put new fencing in for the chickens, stuff like that. So,
are the chickens?
They're eating my wife's flowers. My wife's gonna kill my chickens. Yeah.
The chickens are eating your wife's flowers?
They're eating, starting to eat the hostas. So she said she's going to kill all the chickens. So then I had to put them in I had to build another enclosure for them. So anyway.
Was that you, Amin, or was that actually a chicken in the background?
That was not me, Mark.
No, that's a real chicken.
That chicken saying, "Hey, Giovinazzi, shut up. Don't talk smack about me and my flower eating. Keep me safe from that
soon
box."
You'll hear seagulls, cormorants, whatever, maybe an eagle screeching by. Oh. Actually, It wasn't you're right. It's a rooster, not a chicken.
Yes. All right. So speaking of chickens, let's talk the Fed meeting on Wednesday. I don't think anybody's expecting anything out of that meeting. But what I think is going to be interesting, Andrew, and I'd love your opinion on this. My feeling, and this maybe is just me, thinking about what this governor wants and the way the market is pricing rates and probabilities, I think we're going to start to get some clarity that maybe the odds of 2 rate hikes are underpriced. If we can get past this now, if we're still engaged with Iran, I think that's a different story. But if your assumption is by the end of the summer, we're through this Iran conflict, I just get the feeling, and with the lack of real inflation outside of energy at this point, I just get the feeling that we're going to see a second rate cut come back on the table as once we sign a peace accord, if there is one. That I'm interested to see kind of what the Fed has to say on Wednesday about that. What are your thoughts? Bless you.
Thank you. I think part of the rate problem is still like congressional spending. It's going to be hard for them to cut, I think Iran, there will never be a peace deal. It will just be, they're going to have to somehow try to, collapse everything around oil. I mean, there's no movement on any of it in the last, they say they're going to do something and nothing really happens. So
correct.
I just assume at some point Iran will capitulate just because they run out of money or something. I don't think it's going to be over in a week or a month or maybe 3 months. It's just going to be a slow squeeze. I think that's why VIX is still trading near 19 with with stocks at an all-time high. So the market is waiting for something to happen. In the meantime, like you said, with SanDisk and Intel and all these other stocks that have flown on demand, that part of the economy is still chugging along. And you're right, like energy is definitely going to move prices higher. And how long will the market take to adjust? It's going to take, 6 months, a year. But at this point, who are you negotiating with in Iran? So I think just looking at that, like the stocks can still rally and the market will fill demand. I mean, so you remember when, when the Russians invaded Ukraine, what happened to oil prices, right?
Yeah.
All of a sudden, basically Russian output was just taken off the table. Was a pretty huge chunk, right? Gas for Europe. I mean, it was kind of a mess. But 6 months later, everybody kind of adjusted, and there's little reason to believe that the world will not adjust from this. Once the U.S. said we're like taking over the strait, basically, or shutting down the flow, I don't think we've seen we haven't seen a sell-off day since then. We're straight up.
No, it's crazy.
So, and
I don't understand why they didn't just leave with this 3 weeks ago before they even bothered to offer a ceasefire rather than letting the oil go through.
Yeah, and now there's I'm saying now they're going to bottle Iran up. They're like, okay, you can't ship anything, and their whole the Revolutionary Guard depends on oil to fund all of their activities. So what are they going to do now? It's not going to be an overnight thing, but I think that's how it's playing out. And the U.S. stocks have ignored it. Now, could there still be an oil squeeze in the future? Like you read on Twitter how bad it could be and all this other kind of stuff.
Yeah.
I think VIX kind of thinks that could happen, but when you look at just the price of oil, it's kind of just slowly kind of creeping back up, right? It's not, but it's certainly found a price. And it's one of those things where, we're so in tune to like the Fed's going to come in and rescue us, or the government's going to do the COVID thing, or we're going to get the vaccine, and like you have these turnarounds. And this is just a slower thing to try to solve a very old problem, whether you like it or not, or agree or disagree. That's what they're trying to do. But I don't see how.
But the VIX is
they're negotiating anymore.
But the VIX is, with this, it's actually creating some opportunity for you. We got these stocks at new all-time highs, and people don't trust it, right? Now, I know Apple has earnings, but take a look. The last time Apple was up at these kind of prices consistently, the option premiums were like 19%. Now, I can go to, we've been basically kind of in that range for since this conflict broke out, kind of 250 to 275. And these option premiums have not really dipped below 25. Right. So if you think about it, like that is you're looking at getting significantly more premium. Now, I'm not saying go sell puts ahead of Apple earnings, but what my point is that there is more juice in option sales than normally you would ever see at all-time highs. This is part of the reason why myself and Hans are going live this week for this Great American Income Project, because there is opportunity in the options that we don't normally see. Follow up on Tesla. Tesla has earnings, already had earnings. The options are, lower than where they were. And, this is one where you now have, some opportunity to ask yourself, okay, what do I do with this volatility premium post earnings? This may turn into more of one of my special situation trades than a Great American Income Project, but there are going to be some of these names where post earnings, those premiums hold. Look at Intel.
Yep.
Option premiums are higher than they were before earnings because the stock is moving around so much. There is opportunity there, folks.
Yeah. and that's there are very good trades to put on when you have these short term option premiums so expensive. Which of course that's what you will be exploring. But yeah, there is a lot of opportunity around here, and there's also what Hans mentions as well, the sectors that the U.S. is getting more involved in. They are doing well. So like rare earths and all those, and chips, like the government's like, we need these industries here because they're crucial for the future. It's like one way or another, we're going to build them. So that's and again, you have kind of a stable floor with higher vol. It makes for, an income style,
more opportunity,
an income style trade.
Yeah. Well, as I stated at the top, we got a ton of earnings on Wednesday. I'm going to be live with Hans after the close to kind of go through it. It's the big ones Wednesday are Amazon, Google, Microsoft, and Meta. They're on different paths, right? Very different paths. Amazon is sitting, I believe, at a new all-time high right now, or just off a new all-time high, above 260. Google, after getting some selling, that's approaching new all-time highs. Meta, nowhere near there, kind of in the middle of this big range it's had between April of last year and, April of this year. Year over year, Meta is up, almost from where the earnings were. It's up about $100, but it's also about $100 off, $150 off the high. So it's kind of right in the middle of the range. And then obviously Microsoft.
Meta was one of those ones that was in between, right, Mark? Where from an opportunity point of view, again, when Hans will be talking about this, they have to invest a lot of money in AI, and for a while this Mag 7 could do no wrong, and then everybody realized, they got to spend $50 billion a year on chips or something like that.
Yeah, that's a lot.
And then the stock started getting shellacked. Are they going to turn around on this?
Yeah. The last major earnings, and this is the one that has been the softest, and maybe the most interesting, depending on your view, is Microsoft ahead of earnings. This is the highest pre-earnings options premium that we have had. And this looks like it's a pre-earnings. It's actually not. This is the Japanese yen squeeze here. Here's where we were pre-earnings, and the VIX was still really high. Andrew, I'm going back 5 years, and you got to go back before. We still got a couple days for these premiums to go higher. Last time premiums were this high, we were in 2022 when we were in the middle of a bear market.
Right. I think, again, same thing with Microsoft. They have to spend. And they're also kind of on the bubble of AI replacing software, their software, all that, which I'm not convinced that narrative is correct. Like, you need, ultimately, companies pay other companies for accountability. And just letting people vibe AI stuff and to replace this is just not going to happen. Even in our little company, right? We're not doing that either. So we're using AI, but it's not like we're jettisoning all of our, CRMs and all the other stuff that we have. No. That's not happening. We're trying to use AI to make things work better or easier, but we're not getting. It's made us more efficient, but we haven't gotten rid of anything, so to speak. And I'm sure a lot of companies are doing the same.
All right, so here's a question for everybody, and then I'll ask you, Andrew. You can toward the end. All right, Amazon, Google, Microsoft, or Meta. All right, you have to put $2,500 into a call on one of those names. Which name? And the call expires on Friday. You have to buy a call, an at the money call, in one of those names, the call expires on Friday. Which name are you buying? Which name are you buying?
I'm
love
buying
to hear
Amazon.
your guys' opinion. I said, and then I'll ask you. Andrew is buying Amazon. Why Amazon, Andrew? I was going to let them have their own opinions.
I think Amazon is still poised to do the best in AI. It's only I would say Google probably second.
Yeah.
But Amazon's business, their cloud, their demand for all of the stuff that they do is only getting bigger. But that's basically the thing. I think they don't. Their moat is their business is much different than all of the other businesses as far as competition and things like that. I mean, Amazon really doesn't have any competitors if you think about it. Walmart, right, is their biggest one.
Walmart on the sales side, Microsoft on the server side. I mean, if Microsoft bought Walmart, that would become a problem for Amazon.
Yeah, it would. But you look at it like Amazon trades at a smaller multiple than Walmart does now. I mean, Walmart's business has changed dramatically, but it's it's now becoming a technology sales and a crazy ad business.
Yeah.
But again, Amazon, for a while there, they thought that drones are coming, all of these things that are going to make Amazon's ability to do what they do improve. So AI is not a threat to Amazon. It's only going to help.
That's
Google,
a good question here.
Expensive.
Here's a fun thing. Okay, Grok, if I had to buy one stock among Amazon, Google, Microsoft, or Meta, which stock should I buy? This should be a fun one. I'll tell you before this answers, I think Microsoft has the most upside out of this earnings cycle, just given that how bad it's performed, but it also has the most downside. So that is the one where I think there are the most we could have the most wild outcomes, either up or down. They're all the same.
Yes.
Well, yeah, I think that's the one where you've got the most variance. Amazon, if it sells off, that is your opportunity in a couple of days to go long. Google, I think, is going to be around for a while. They're involved in quantum even, so that's another one where if they absolutely crush it, you can kind of kick back and wait and see which one is best. All right, so we'll close on this. This is just Grok's opinion.
Grok likes Amazon.
Bottom line, Microsoft offers the strongest blend of high margins, diversified revenue, enterprise mode, AI tailwinds, and analyst conviction. The year-to-date mix makes Enterpoint most compelling relative to all others. Wow. This is not personalized financial advice. Markets move fast. Do your own due diligence. There you have it. So the AI in Grok says it thinks Microsoft has arguably the most upside. And yes, all these AI engines are different. They all do different stuff. But anywho, it is now 10:30. We are going to jump into the Ticker Highlight Show. Once again, if you'd like to join us, you have to click this link, name your own price, and Hans and I begin our live 3-day summit tomorrow. You can join us here, or make sure you're checking your email to join us today or join us tomorrow. So, all right, everybody, we're now going to go behind the paywall. For Andrew T. Giovinazzi, I'm Mark Sebastian. I am your only option, and I'm dressed as in my Clark Kent uniform today. My Clark Sebastian uniform today with my glasses.
Clark Sebastian.
See, look, like I'm Clark Sebastian. I'm just an everyday guy. I'm Mark Sebastian, your only option. So for Andrew T. Giovinazzi, I am Clark Sebastian. I hope you have a golly great day. Have a good one.